Good morning, and thanks so much for tuning in. You're watching Trade Talk on BQ Prime. My name is Alex Matthew, and with me is Hiral Dadia. Morning, Hiral.
Good morning, Alex.
We had a bit of a false start, some technical issues, and hopefully you can hear us loud and clear. We're talking about the start today, which is likely to be a bit iffy in terms of the breadth that we saw. Of course, for the broader markets yesterday, it was very good. You had the broader markets outperform, but the Nifty 50 traded in a very narrow range. And we're likely to see that today as well.
Absolutely. The range in terms of the large caps does remain narrow in terms of benchmark indices. But it's interesting to see how the broader markets are actually scaling, record high levels. Interesting is what is happening is that the traders are actually preferring, Alex, to stay on the sidelines. And despite this kind of range-bound activity, you have seen buying that has emerged in sectors like power as well as cap goods. However, IT stocks have failed to deliver, and this is despite the strong upsurge that we saw in NASDAQ in overnight trades as well. Overall, if you go to see, there is a pretty non-directional activity in the markets right now, and this is mainly on the higher side. We are seeing stiff resistance on Nifty 50 in terms of 19,450, and on the lower side, exactly at around 19,375 is where Nifty is actually taking support. So only if you're able to dismiss those 19,450 levels, that's when we will see an upside. But if we break those 19,375 levels, then selling pressure further could creep in as well. If you talk about where Bank Nifty goes as well, we did open gap up, but it was not able to sustain successfully and trade above those 44,100 levels. And now the immediate support that we're looking at in terms of Bank Nifty is at around 43,950. Now, a strong move above those 44,100 levels on the upside. Along with that, if we see some short covering, then there is a possibility that some bit of interest in terms of banking stocks that could creep in as well. But that's the caveat that we need to watch out for. Interestingly, in terms of stocks, what we will be seeing today is Coal India, iShares, as well as GAIL. All the three counters have their AGMs today, so there will be some focus on these three names. And very lastly, all your stocks which are space related will be in focus as well on the back of Chandrayaan-3, which is absolutely ready to make its landing.
No, absolutely. And our thoughts and our best wishes are to the team that is handling that soft launch. And of course, all of India is looking towards the moon later today. Around 6 o'clock is when the soft landing of Chandrayaan-3 is set to take place on the south pole of the moon. And if that does indeed take place, India will be the first country in the world to achieve such a feat. For now, let's turn back to the Indian equity markets. And as Hiral pointed out, there's action in a few sectors that have been beaten down in the recent past. Metals was one of that group. You saw the metal index that gained ground in trade yesterday. And in fact, the first stock we're talking about is from that pack, Hindalco. And this is on the back of announcements that were made in the AGM, specifically with regard to capex that is set to take place. We've got Rishi joining in to give us some perspective on that. Rishi, significant amount of investments that is on the cards. What can you tell us about it?
So firstly, it's deciding to enter the passenger coach manufacturing with regards to trains. So the railway segment has seen a lot of capex in the recent past, and Hindalco is also entering this. So it has announced a 2,000 crore planned investment for new extrusion and fabrication facilities in India, and with a focus on helping build the Vande Bharat passenger coach trains as well. In fact, within this segment, it also recently announced a 200 crore investment and tie-up with Texmaco to build aluminium rail wagons. Apart from this, there was a lot of focus on sustainability and sustainable investment by Hindalco in its AGM. Particularly, it has announced to establish the first ever copper and e-waste recycling facility with a planned investment of 2,000 crore for this facility. And it is also working closely with OEMs with regards to supplying critical EV manufacturing components. So that's also something that it's entering. Apart from this, Hindalco, with regards to sustainability, it has announced that it is utilizing almost 90% of the waste that is being generated, and in fact 100% of the fly ash and bauxite residue that is coming out of 3 out of its 4 refineries. Apart from this, regarding capex that is already underway right now, its US subsidiary, which is Novelis, has $3.5 billion of capex that is currently underway. In regards to Hindalco India, it has about 1.13 billion growth capex that is currently underway. Apart from this, it is also increases downstream focus, which is helped the company to de-link itself from the volatility that is being happening in the LME. So the price volatility that we're seeing recently in the LME, it is a bit more immune to that. So that is something that is important to watch out for. Its stock, in fact, has seen some traction along with the other metal stocks. It has grown about 2.5% this week. But in this month overall, if you look at it, has declined by 3%. So it may see some action today.
That's going to be interesting to watch out for. Thanks, Rishi, for getting us the details. In fact, I was just looking at a one-year chart as well. It's been absolutely lackluster with regards to Hindalco, because it's a minor 5.5% up move. It did hit a high of somewhere around 504 in the last 1 year, but since then again corrected quite a bit. So as Rishi was mentioning, yes, probably this could be one of the buzzers in trade today. But moving on, a lot of other stocks that are in focus, some that could see some bit of a negative reaction, some that could see positive reaction as well. Himansh is standing by to get us more. Himansh, names like Brightcom, you have NBCC, these are the ones that are in focus. What are you picking up?
Right. So amongst the stocks that are in focus, Adani Total Gas came out with their press release yesterday, where the company informed the public about its partnership with Prakriti E-Mobility to set up electric vehicle super hubs in New Delhi. Now, these will consist of 200 charging points in the national capital, and these will be used by both aggregators and individual EV owners, which improves the cross utilization. Now, these two companies have previously worked together as well for operating a cluster in Okhla, Delhi, and this partnership will be working on a revenue sharing model. Coming on to the Brightcom Group, where SEBI has barred Chairman and CEO Suresh Kumar Reddy from dealing in the securities market, from holding the post, and also from holding the post of director in other listed companies. This follows allegations regarding siphoning of proceeds from the preferential allotment of shares. Their CFO, Narayan Raju, has also been barred from holding any director designations in listed companies. NBCC, the company has signed a memorandum of understanding with Delhi Metro Rail Corporation, where the companies have decided to undertake work together for infrastructure development in the overseas. The details in the scope of work and the size of the undertaking is not yet known. Then coming on to Piramal Enterprises, the board has approved the public issuance of non-convertible debentures in one or more tranches, where these will have a face value of 1,000 each, and the total fund raise aggregates up to rupees 3,000 crores. As of May end, the company had cash on hand of about 27,000 odd crores, while the total debt stood at 50,000 crores. Then IndiaMart Intermesh also received shareholders' approval for buyback of 12.5 lakh equity shares, which represents about 2% stake in the company. The buyback price is set at rupees 4,000 through a tender offer route, which represents a premium of 27 odd percent to yesterday's close. The cash on hand for the quarter ended in June stood at 2,300 crores, while the debt has been seeing gradual reduction over the quarters. And the last in June, it stood at around 45 crores. So we can assume that much of this cash would be laid out for capex plans going forward. Linde India was awarded a LOA by Indian Oil for job work contract within Panipat refinery complex, where the company is to operate and maintain the facility for 20 years post completion. And the company is also to fund this, has also mentioned that they'll be funding this capex from internal accruals. Then one more stock to watch is SJS Enterprises, where a host of mutual funds were buying the stock in yesterday's trade. As per reports, it was the most traded stock in terms of value, with trading volume surging over 60 times its 3-month full day average. Yesterday, it saw two bunch trades summing up to almost 600 crores in value, with 1 crore shares changing hands. The stock dipped 4.1% intraday yesterday, but it recovered and closed over 3% above on exchanges yesterday. Besides these stocks in focus, we also have a brokerage commenting on Poly Medicure, which is a leading exporter of Indian medical devices. Now, it leverages government support and import substitution, as well as the China Plus One strategy, which a lot of these companies across sectors have been, jumping on this bandwagon. But the ongoing capacity expansion will drive the growth in India and exports. and the strong brand name for this company also allows for deeper domestic market reach. Now, the company has initiated its coverage with a target price set at 1,690 a piece. So these are the stocks in focus, and let's see how they trade in the market today.
Absolutely. Thank you so much, Himansh, for that. Just a small point on the Brightcom update. You'll find more details in the story on the website, bqprime.com. But of course, wanted to mention Hiral, Shankar Sharma, as well as 21 others have also been barred from selling the stock in the exchanges. And we'll have to see what the implications of that are on the stock. Of course, in the newspapers today, there are quite a few reports that relate to significant stake that is in the works in the pharma space that could be purchased. And we've got Saloni Doshi joining in to give us some perspective on that. Saloni, morning. What do you have for us?
Morning, Alex. So first we've got BEML. So the company bagged orders worth rupees 101 crore from the Ministry of Defence. This order was for the supply of command post vehicles. Next, we've got Vodafone Idea. So according to a PTI report, the company plans to clear about 2,400 crore of dues to the government by September. The company recently cleared pending dues of license fees and spectrum usage charges of about rupees 450 crore for the March quarter of FY23. The company will clear dues for the June quarter and spectrum installment with applicable interests by September this year. Next, we've got Zydus Life Sciences. So the company acquired 6.5% stake in MyLab Discovery Solutions, and this transaction is to be completed within the next 20 to 30 days. Then we've got Accesscades Technologies that completed acquisition of Ad Solutions GmbH, which is a German company. With this transaction, Accesscades has strengthened its position in the automotive vertical and has enhanced its presence in Germany. Next, we've got RITES. So the company emerged as the lowest bidder in the tender floated by the Railway Board. So this order received by them was for the testing and inspection of 60 lakh meter gauge train rails with an order value of 65.4 crores. The tenure is of 5 years with 1 year extendable. Then we've got Geo Financial Services, whose stock hit 5% lower circuit on Tuesday, as a result of which the scrip will now be removed from all S&P BSE indices on August 29th. If the company continues to hit a lower circuit in the next 2 days, the removal date will be deferred by another 3 days. Then we've got Nirma, which is in the final lap of discussions to acquire Glenmark Pharmaceuticals' 82.95% stake in Glenmark Life Science. Next, we've got news on Torrent Pharma. That is, it has joined the race to buy out the Hamid family's stake in Cipla. Its competition includes Blackstone and Baring Private Equity Asia. Torrent is looking to form a consortium with private equity funds and has had preliminary discussions with a few. And last, we have the Union Bank of India. The floor price on the bank's QIP was set at rupees 91.1 per share according to a filing on August 21st. And the fundraising through QIPs was up to rupees 5,000 crore. According to a Bloomberg alert today, the QIP issue price is set at rupees 86.55 apiece. This QIP is aimed at improving the capital adequacy ratio and is to result in the slight dilution of the government's stake in the bank. So the bank's first quarter financial metrics improved significantly. So the loan growth was up 12% year on year, while the profit after tax was up 106% year on year. The gross non-performing assets stood at 7.34% versus 7.53% on a quarter-on-quarter basis.
Thanks for getting us the details. It's going to be interesting to see how this pharma pack pans out, because clearly Glenmark Life Science and the talks with Nirma are absolutely ongoing since quite some time. And Glenmark has approximately a little over 80% in Glenmark Life Sciences. And what news reports are indicating is that Nirma is expected to buy out that entire stake now.
And even Cipla, the last time there was a news report, ran up quite significantly.
And now they're saying that it's Torrent Pharma who's come into a race. So another pharmaceutical company coming in is actually telling you the kind of consolidation that we're expected to see in the pharma sector as a whole. So it's going to be an interesting space to watch out for from here on. So let's watch out for these counters pretty closely, and we will try giving you more updates as they emerge. But moving on, you have the chemical, which is the specialty chemical industry as well, that has been in focus and has been, one of the sectors that is being watched pretty closely because of the kind of headwinds that it has seen, the kind of stock price, exactly, and the kind of stock price correction that we've seen on the counters as well. Varsha is going to give us more in terms of what is the reason to see this downtick and what's in store going ahead. Varsha, good morning. What do you have for us for the sector? What are the key highlights that one should be watching out for from a forward-looking perspective?
So before deep diving into the sector, let's see what chemical sector comprises. So you have got broadly divided into commodity or basic. So Deepak Nitride is into phenol, then benzene. If you see the benzene, you have got Aarti Industries. Then specialty chemicals, if you see, we have got bromine where Neogen Chemical operates. Then a fluorination where Naveen Fluorine is. And also if you see the further subdivision, we have got petrochemicals and agrochemicals. Now, if you see the historical growth rate of a chemical industry between 2006 and 2009, the industry grew at almost CAGR of 15%. Between 2013 and 19, it was even higher at 22%, while it is expected to grow at 11 to 12%. That is CAGR returns of 11 to 12% during 2021 and 2027, according to McKinsey report. Now, that's when the entire sector was growing at this speed. Several emerged as wealth creators, for example, Deepak Nitride, Vinti Organics. If I take an example, so Naveen Fluorine from 2006 to 2023, Naveen Fluorine grew almost 70x. Now, post 2022, what happened? The tailwind subsided and the sector saw multiple headwinds, such as destocking happened due to excess inventory, and this impacted the volume. And then when you've got higher inventory sitting on your balance sheet, your EBITDA margins gets affected. Also, if you see the revenue, so recent quarter we saw revenue of most of these chemical chemical companies was down due to the low realization because the end product price fell. And when you have China back, so China started dumping its products, all over the world at such low prices that several chemical companies, including the global one that you mentioned, did not compete at such low prices. And also, you've got the supply bottlenecks which affected the industry. Now, will this headwinds be forever? Maybe not. So it is expected that H2 of this year will be good for the chemical industry, and FY 2025 will be where the chemical industry will be back on track. Now, when we speak about the valuations of these companies, so we have a data where many companies have given sales guidance for FY 25 and 27. So one is Vinti Organics, where they've given the sale guidance for FY 25. So if you see the current PE of Vinti is almost 42, but if you add on the guidances of sale guidances wherein your EPS improves, the valuation also improves. So forward PE of Vinti Organics, if you see, and if you compare it with current PE, forward PE is almost 28. And if you see the Neogen Chemicals, which have given the sales guidance of FY 27, the forward PE is almost 20. Now, what is the current PE? Is almost 78. So the valuation of a lot of these good companies, well-run companies, will improve a lot. As they say, the form is temporary, but the class is permanent.
So does this mean that at the current valuation, the stocks are appearing relatively cheaper as compared to the historic valuations?
Correct. So if you see the historical valuations of all those companies, they were at really high because the tailwinds were there, and if you see the COVID from 2020 to 2022, all these companies were doing really good because of the China plus one. China was closed, and we were supplying raw materials to all the countries. Plus, if you see now, all these companies are doing capex. So when this capex gets over, the revenue you'll see the revenue from those capexes from FY 25, and where all these companies will emerge as a long-term compounder.
Interesting. So similar perspective, I think, to what we were getting on not too long back on IT, where they were saying that earnings may not have bottomed out, but perhaps the prices have. So maybe that's a sentiment that you can take into the specialty chemical space as well. Certainly one to watch. And maybe over the coming weeks, we'll get you more details on an individual stock basis. But this sets the context, I think, very well. Thank you so much, Varsha, for joining in and giving us that perspective. A lot of action here in the primary markets. And in fact, we continue to focus on the latest updates. TVS Supply is the next one that we're focusing on. And Mihika is joining us to give us some perspective on that. Mihika, What do you have for us?
Good morning.
Morning.
So TVS Mobility Group's company, TVS Supply Chain Solutions, will make its debut on the stock exchanges today. It's a 880 crore IPO, which went live from August 10 to 14th at a fixed price band of 187 to 197 rupees per share. The IPO subscribed 55% on day one, 1.03 times on day 2, and 2.78 times on day 3. A little bit about the company. It specializes in supply chain management for various entities. The firm primarily operates in two categories. The first is the integrated supply chain solutions category, which has services like sourcing and procurement, integrated transportation, and supply chain consulting. And the second category is the network solutions, which has end-to-end freight distribution, warehousing, at-port storage, etc. The company's listed peers would be to the likes of TCI Express, Blue Dart Express, and Delivery. The total issue size of the IPO was 880 crores. Originally, the fresh issue stood at 750 crores, but due to a pre-IPO placement carried out by the company, the final fresh issue was 600 crores. The company is also has an offer for sale worth 280 crores, which involves an offload of around 1.42 crore equity shares from the selling shareholders. The proceeds of the IPO would be used for the repayment of outstanding borrowings or a portion of the borrowings owed by the company itself and also its subsidiary TVS Logistic Investment UK. So let's see how the stock performs today as it goes live.
Absolutely.
Yes. In fact, that's going to be an interesting listing to watch out for. And apart from that, in the primary markets, you have Aeroflex Industries, where the IPO is ongoing. Today is the second day, and it's almost subscribed 6.71 times on the first day. The bids have been led by non-institutional investors, which have subscribed almost 14 times. Retail investors have subscribed around 6.7 times. And the reserved portion shareholders have subscribed around 3.6 times. Institutional around 1.17 times.
A lot of interest.
Absolutely. And tomorrow is going to be interesting to watch out for, because even the anchor book, the overall, that seemed to be pretty interesting as well. And there's a lot of H&I interest in terms of Aeroflex as well.
And big names.
Absolutely, big names. So it's going to be interesting to see how that one stacks up, in trade tomorrow as well. In fact, that's all that we have on this session. Lots more lined up on BQ Prime. Please stay tuned.